Hi, I'm Jimmy. In this video, I'm going to walk through 5 of my favorite dividend stocks that we could buy and hold forever, and ideally get closer to our personal goal of achieving financial freedom. Now, I'm a bit excited about this opportunity to find good dividend stocks because I'm sure many of us know that the stock market has been on quite a tumble over the past few weeks. And the advantage of a big price drop for dividend investors is that it creates a handful of long-term dividend opportunities with built-in higher yields. Let me illustrate real quick. So let's imagine that we have a great dividend long-term stock and we love it. We've just been waiting for it to get to the right price. So let's imagine that this current dividend stock is trading for about $20 a share. And also let's imagine that they're expected to pay, let's say, $1 dividend over this year. So what's that dividend yield? Well, we take the dollar, we divide it by the $20 that we would pay for the stock right now, and we get a dividend yield of 5%. Okay, simple enough. But now, what if the stock price rises over the next few months or over the next year? However long it's been, but it's sometime after we bought our shares. Now let's imagine that the stock price at that time rises to $25 a share. Well, what's our dividend yield now? Well, the dividend yield that we would find quoted on Robinhood or M1 Finance or Yahoo Finance, wherever it is, well, it would say 4%, which is the $1 divided by the current stock price of $25. But that's not our dividend yield. We bought it for $20 and we still received the same $1 dividend. So therefore, our dividend yield remains the original 5%. Now, what if this particular stock increases their dividend by, let's say, 10 cents to $1.10 per year? Well, now our dividend yield just went up. We don't have to put in any additional money. The $20 we already invested now gets us $1.10 every year. Essentially, this gives us a new dividend yield of 5.5% on the money that we invested. Now, this is what we're looking for from this type of list of great long-term dividend stocks. Companies that should remain fundamentally stable over the long run, could increase their dividends, and one that we would feel comfortable with owning for many years. And ideally, once the stock market recovers, we'll own great dividend stocks that in theory we could sell for a profit if we wanted. But in the meantime, we get to continue collecting solid dividends. Okay, now let's jump into our first forever dividend stock. First up, we have the classic dividend stock in AT&T, ticker symbol T. They have a dividend yield in the range of 6%. Then when we switch over to AT&T stock chart, well, we can see that the stock market has struggled recently and AT&T has drifted lower with some extreme volatility. But when we switch over to their dividends, well, we can see that this has been steadily climbing. And then when we add earnings per share to this chart, well, now we can see that broadly speaking, AT&T does a very good job of earning enough profits to pay out their dividends each year. And this tells me that if we were to pick up AT&T at a price that we deem worthy, well, it's possible that AT&T could remain a high-quality dividend stock for many, many years, which is exactly what we're after. Okay, now we're jumping over to a medical company in Cardinal Health, ticker symbol CAH. Cardinal Health has a dividend yield in the 4% area, and I think it makes sense, given the current environment, to include a solid healthcare company on any list of good dividend stocks for the long run. And then when we look at their stock over the past year, well, we can see that the price has dropped much in line with the stock market. So perhaps this is an opportunity to pick up this particular healthcare company at a better price. And then when we switch over to their dividend history, well, once again, we can see that they've consistently grown their dividends over the long run. And then when we add earnings per share, well, earnings per share are more than covering their dividends. And analyst estimates, they're the ones on the far right, 2020 and 21. I just took those from analyst estimates. Those are expecting for that trend to continue. So I believe that overall, Cardinal Health looks like it's in a decent position from a dividend stability standpoint. Okay, now I know I'm blowing through these companies pretty quickly. If you see any on this list that you think we should do a deeper dive in, please let us know in the comments below. Okay, now we head over to an industrial company in 3M, ticker symbol MMM. 3M has a dividend yield of about 4%. And once again, it seems that 3M is a type of company that could be a very stable company over the long run. We can see that 3M stock has dropped a decent amount over the past few weeks, and this could be the opportunity that some dividend investors are waiting for. When we look at their dividend history, well, we can see it's been fairly steady, and then we add earnings per share, Well, once again, it seems that profits and dividends are heading in the right direction. And I wouldn't be surprised if 3M's dividend continues to grow in the coming years. I think this is a very stable long-term dividend stock. Okay, now we switch over to another company I've talked about in the past, and that's Home Depot. Ticker symbol HD. They have a dividend yield in the 3% range, and they're a bit unique for this list because they bring some growth to the table that perhaps some of the other companies don't bring. Plus, they bring a fairly stable dividend. And when we look at their stock history, well, once again, there could be an opportunity since there's been a good pullback in the stock. And when we shift over to their dividends per share, well, here we can see that the recent decade or so has shown on an annual basis, dividends have grown quite nicely. And then when we compare that to earnings per share, well, we can see that profits have been more than strong enough to handle the growth in their dividends. So once again, to me, this is an ideal type of long-term buy and hold dividend stock since there's some growth and a decent amount of dividend growth. Okay, now we jump over to a fairly defensive company in waste management, ticker symbol WM. They have a dividend yield in the 2% area. This is the lowest dividend on our list, but they are a bit more of a defensive name, and in theory, this could make sense. The defensive attributes that this thing brings to the table could make up for the fact that they have a lower dividend yield. When we look at waste management stock chart, well, we can see that this stock has dropped, which means that the dividend yield right now could be better than it's been since about November or December of last year. Now, when we look at their dividend history, once again, we can see that they have increased dividends steadily for many years, which is once again exactly what we're after. And then when we add earnings per share, well, once again, there's plenty of room for waste management to continue to increase their dividends over the next few years. So I think that waste management could be an ideal company, an ideal buy and hold dividend stock that we could hold almost forever, assuming we do our annual checks. Now, if we don't feel comfortable picking individual dividend stocks, I actually did a video where I go through 5 dividend ETFs that pay monthly dividends if we're interested in more frequent dividends. Well, if you're curious, that could be a good next video for you to watch. There's a link right here. There's a link in the description below. And I want to thank you so much for sticking with me all the way into the video. I really appreciate it. Hope you found this interesting. Thanks, and I'll see you in the next video.